Hey, Sugar. Good morning, good evening, depending on where y'all at.
Good morning.
Oh, man. Okay, let me get everything together. Man, listen, my Saturday night lives is gonna be no, they not gonna be formal. I ain't, you know what I'm saying? Like, this is really the time that I be looking at charts, that I'm doing what I'm doing. So I decided to give y'all, I guess, an inside look so that y'all could see how I look at things for those individuals that's joining the 52 weeks, or those new investors that's jumping on, coming on, joining the nation, joining the family, so that they could see how once they invest a little bit of time and energy and effort, guys, the sky is the limit. Believe me when I tell you, you guys can accomplish anything that you set your mind to, especially trading. All we got to do is work together to get there. And so that's why I do the Saturdays. So it's not like I'm going to be doing no PowerPoints or nothing like that, like a formal class. It's just me jumping on and looking at charts and looking at the things that I look at. Okay, so it's only three of us on here, which is kind of good because then it's more intimate than that. So are you guys in the 52 weeks, or are you new investors, or kind of give me an idea of where y'all at in the process?
I just joined the 52 weeks like 3 days ago.
Okay, so you brand new then. All right, sugar.
Yeah,
All
yeah.
right.
I've been binge watching the classes, so I'm like up to class 8 now. So
Okay, in my classes or in
your,
Goldfinger's
your
classes?
classes, I haven't even gotten to his yet.
Okay, cool. No worries, no worries. So at least you know a little bit about what I do and what I talk about. How about you, sugar? Queen, where you at in the process?
You talking about me?
Yes, ma'am.
Well, I am still looking and learning. To
Okay.
be honest, to be honest, I'm still going through my academy
Hmm.
because I've been training to work from home, and then I legitimized my business I already had. Just got my LLC, so
Okay.
uh, I'm trying to.
Congratulations.
Thank you. I'm just trying to lay the foundation down for everything, so
Okay.
that I can hit the ground running when I'm really ready to jump in.
That's good. Okay. Great. That gives me an idea. All right. Let me try and bring up my scanner. All right. So then let me just officially introduce myself. My name is Jacqueline Lopez. I am the creator of the Milwaukee Sauce Strategy. I also am the co-creator for the 52 Weeks to Freedom course. Me, Chad, and Mickey created the course to help all of Trade Nation create master traders. So that is our ultimate goal. It's not about building a team. It's not about what team you own. It's about all of Trade Nation, anyone that is under Chad's organization, and making sure that we all become traders, because ultimately that's the reason why we signed up, right? So what I did is I've been in Trade Nation probably about 2.5 years now. And so the first 52 weeks, really the first 6 months, was me just trying to figure it out on my own. I wasn't really looking at the academy like I should, to be honest. We didn't have, all of these other things. We didn't have the 52 weeks. We didn't have all of these groups and support systems. We didn't have any of that. So it was just kind of figure it out for yourself, right? And then I started using the Harmonic Scanner primarily because, as we all know, that comes with our platinum package, right? It is also the product that is the flagship. It is what I am is founded on. It is the product that Christopher Terry created, right? So, that being said, I like to refer to the Harmonic Scanner as our training wheels to trading, right? It gives you access to Trading View, right? Which is basically built into the platform because that's what it's scanning from. And so you don't have to purchase an extra subscription for TradingView because a lot of it you get already built into the Harmonic Scanner, right? You can see it right there, right? Chart by TradingView. Okay, so you get the majority of the indicators. Now there are some indicators that are on TradingView that you cannot get in the Harmonic Scanner. So if you're going to become a master trader, ultimately in the future, you would need to, upgrade to a Pro Plus subscription. But if you're just getting started, my suggestion would be, why pay for something extra when you can do all of your practice right here on the scanner and you already paying for it anyway, right? Now, do y'all know how to use the scanner?
I
Yeah,
watched the music for the first time last weekend.
Okay. So you fresh to it. How about you, Sugar? I heard you say something.
yes, I've used that before. I'm kind of familiar with it. I know how to use it for the most part.
For the most part. Okay. So for me, right, when you're looking at the scanner is amazing, right? It tells you where to get in, it tells you where to get out, it tells you how to protect yourself in the event that your analysis or their analysis is incorrect, because there are some factors that are in the market that you learn as you're going through the 52 weeks that manipulates the market. It will force the market to go in an opposite direction than what structure and your analysis might tell you is going to go, right? And so we talk about some of those things, right? But for the most part, the scanner tells you everything that you really need to know as a beginner, because you don't really have to think about it. If you know what your ABCs are, you know what your colors are, right? You can simply copy and paste, right? It's just that simple. Now, the scanner by itself is 87, 88% accurate, right? So when you're taking these trades, for the most part, they're going to be spot on. Now, there's going to be some cases where, it's you're going to lose, right? Because we can't guarantee a win for every single trade, right? But 8 out of 10 is great. Now, the thing about the scanner is it tells you where to get in, right? It tells you in which direction. And it even tells you how much to risk, right? Either for your reward or for your loss, right? The one thing the scanner that I found it wasn't telling me was when. When is it ready, right? So like, for example, with this setup right here, if you notice, it never actually hit the entry. It did the move. It went to the downside just like the scanner predicted, but it never actually got all the way up here. So if you simply placed an order there, then you would have never got entered into the order and you would have never profited from it. It would have done the move. You would have had a correct analysis, but you wouldn't have benefited from it financially. You understand that?
Yeah, I got it.
Yes.
All right. So what I did was I took a series of indicators after a lot of studying, right, and applying them and studying them and back testing and changing the inputs to figure out what was going to work and what wasn't going to work together, studying different educators, right, different strategies. And then I came up with a series of indicators that work very well together, right? And what the Milwaukee sauce does is it actually gives me a better entry. It lets me know when I can get in. Oh, we were looking at EN last week. I wonder, is it on the scanner? Were either of you on the call last week?
Yeah, I was.
You were.
Uh-huh.
What did you think about that?
You know what? I took notes. I paid attention,
Mm-hmm.
and I said, okay, well, you dropped all the previous week's videos. I'm gonna make the time and go through those, take notes, and then I'll be ready. But things didn't go like I planned last week. But when you said it was gonna do what it did, or do what it would do, based on the Milwaukee sauce, and then I saw, oh shit, it really did happen. Yeah, let me go ahead and get this plan out, cause I need to go out here and make it do what it do.
Right. Exactly. Now, so the great thing about last week is not only did it showcase the Milwaukee sauce, but as you continue to go through the 52 weeks and you learn what Mark teaches when he starts teaching you trading with Goldfinger, he focuses in on the head and shoulder pattern, which is the cipher, which is what this is. You see what I'm saying? So last week's class was very important. Just ironically, the market did exactly what we wanted it to do, right? Because if you notice, the scanner said that because it went from X up to A, right? And then it went down to B, it created the left shoulder. This over here is the left shoulder. Once it broke out past A, creating a new high, which was C, that created the head. Once it came back down to D, right, it gave you this move, which finished the head. And we know, based on what the scanner tells us, if the D is at the bottom, that's a buy, right? So it bought right from the D where the scanner said at that entry, right? Now look at where the sauce told us to get in though. Even though it started pushing to the upside at the D at the entry, because if you trade the scanner without the sauce and you just trade it using other people's strategies and using divergence and trend lines, they're going to tell you, you don't trade on the D. You wait for this D candle to close, because if you don't, the market could possibly continue to shift and the D will move on you. So you wait for it to finish what it's going to do, and then you take the move. Now, if you notice, the Milwaukee sauce didn't say it was actually ready till it got right about here when the cross started happening. Right? And then it pushed all the way up to make the first leg. So the D back up to that A is the first leg of your right shoulder on a cipher pattern. And then it's going to basically consolidate in that area, right? And then it's going to push its way back down, completing the right shoulder. And then on the weekly chart, it told us that it was going to continue to push to the upside, which it did. And the funny thing is, I didn't even pay attention to the news and how they talked about NZD was going to have that major announcement. And then it shot the market up on all the NZD pairs over 100 pips in a minute. pushing the market to the upside. Part of that market manipulation, right? And look, that's exactly what happened. It did the whole right shoulder. It gave you back 100% of the move. And then it reversed to the upside. And look, once it broke out of that shoulder, it just kept pushing up, kept pushing up, kept pushing up. And it's been pushing ever since. So that was good, perfect. That was perfect class last weekend. I couldn't ask for a better class, to be perfectly honest with y'all. I couldn't ask for it to happen any perfecter than that.
You see, I asked, so yeah, we having class tonight?
Right. I couldn't even ask for it to happen no better than that. And then it gave us multiple entries too, because it pulled right back up to that shoulder like we said. And then it gave us a whole nother entry right there. It wicked it again. And then it gave you a whole nother entry again if you missed it, pushing it all the way down. And then all you had to do was wait for the cross again and carry it all the way back up. All right, so that was last week's class. That was a recap. All right, so have y'all been working on doing y'all ATRs, or do y'all got questions about how that works? Since it's just us.
I haven't gotten that far yet. Like I said, I just literally got in the
You just
group,
literally
so.
started.
Yeah, I understand the concept. I know how to do it. I never knew what those numbers were on TradingView, but now I do know, and I know what to do with them. But yeah, so I haven't done it yet. So
Okay, so
for the market to open and try everything next week.
yes. So when you're doing the ATR, you want to do it when the market is closed, when it's not moving, like now.
Mhm.
Like either Friday evening, anytime Saturday, or Sunday morning before the market starts moving, because you want to see what happened last week and you don't want to be distracted by current market, right? And it gives you an opportunity to kind of forecast what's going to happen. And in some pairs, you'll even see, let's see if I can find one. Let's see. Yes. Let's see if they give me that one. Some of them will even show you the market already moving in the next week. Let's see. EUR. Let's see. USD. What pairs are y'all focusing on? Have y'all picked one as a favorite? Or what study groups are y'all in?
I'm in the South.
I'm in Texas.
So y'all in the South?
Yeah.
You South too? I heard another voice.
Yes, ma'am.
Okay, so everybody on here is South.
Yes, ma'am.
Okay, all right. So let's do this. Let's go to the South. Let me see. South. Here go my South group. Boom. All right, y'all can see my screen, right?
Yeah.
Yes.
So for the South, these are the pairs, right, that the South should be focusing on as a team. Now, that's not to say that you have to pick one of those to be your favorite. But as a team, the South should be looking at those pairs because if you notice, what does all of those pairs have in common?
USA.
USD.
US.
Exactly. And if you notice, the Northeast has what in common?
Australian dollar.
Exactly. So each one of the study groups should be focusing on a specific currency, right? And how that currency is impacted or influences the market by studying all of these other pairs, right? And as you study them, you'll notice, right, 2 of your pairs have the USD as the base, and 2 of them has USD as the quote. And then our wild card has USD as our quote, right? And as you study, right, your currency strength and your currency rules, you'll understand why I chose those specific pairs for your team. And it's because ultimately in the end, you will learn how to trade all of the pairs at the exact same time. So if you know what direction GBP USD is, it is safe to say that you should be able to analyze and forecast which direction all of these other pairs will go into. Does that make sense?
Yeah.
All right. Now, so I just wanted y'all to know that. So let's just see, GBP USD. Okay, so y'all got USD pairs. That's easy enough. Let's go back to the chart. Wow. Let's pick one of these. All right, that's EUR USD. Y'all got GBP USD. Oops. Let's see, GBP USD. Let's see what it gives us. GBP USD. It's on a week. I don't really like the way that's setting it. Let's see. What was the other one? USD franc. Oh, look at franc. Whew. Look at that. That's been selling for a while. Let's see. It's on a weekly chart, y'all. That sucker is dropped 698 pips in 70 days. $77 days, starting to pull up. All right, look at that RSI starting to curve. All right, so on the weekends, what I do is I take a look at the weekly chart. I start calculating my ATR. All right, now I'm gonna show y'all. I've been working on the ATR chart, trying to pull this thing together as a team. Let's see. All right, so check it out. I've got some of these all the way done and some of these not all the way done. But if you notice, based on the 32 weeks, right? AUD CAD, which is the first one on the list, is averaging about 168 pips every week. Typically, all right? So typically, AC or CAD will give out 168 pips in a week. And if you take a look at each week, it ain't been too far off of that. It's had a couple spikes, right? We'd have to go back and take a look at maybe the news and see if there were some things that were happening during those weeks that would cause those spikes, right? We also know that, you know, with the announcement of everything that's going on in the world and the economy, it has some spikes, some changes to the direction and the amount of pips that were given out to the different currencies, right? I like to refer to what's going on, y'all, as an economic reset. If you study economics or international business of any kind of sort, I mean, it's funny to see the things that you studied in the classroom actually happening in real life. All right. So let's see. Frank is giving out how many pips? 175. 218 is what? JPY. Let's see if we can get any of those. Let's see. Go back to the charts. Any of the odd pairs, basically. since I got those done already. What did y'all have? All USD?
We have GBP USD, Euro USD, USD CAD. And I forgot the wild card. NZD USD.
Let's see. Where is it? NZD USD. Yeah, y'all don't have all USD. That's the Northeast. Okay. So let's see. Let's see. So y'all got NZD USD?
That's our wild card.
That's your wild card. Oh, look at that. Now this might be good, y'all. Let's see. Let's see. Let's see. Ooh, do y'all see that? Looks like it could possibly be a head and shoulders. Is that the head? Is that the shoulder?
Inverted?
Yep, inverted. You see it? This would be the shoulder, head, then come back down to right about here, maybe. Yep, which is basically the 50, and the 50 you push it back up. What you think?
I see that.
That's what I see.
Plus, you said something about that bottom area. If the blue is on top, it's gonna buy,
Mm-hmm.
and if the red was on top, it was gonna sell.
Right, but look what's happening on the Hakanashis. The Hakanashi tells us the strength of the trend. And because it has changed, and this is a doji candle, let's hide that. Is it? Yes, look. That was last week. The 3rd was a doji. Then this week, the 10th was a red candle. And look, when you look at it on the Japanese candlesticks, the doji even happened the week before that on the 27th. So really, this might be a sign of a reversal on the week. Yep, this might be inverted on the week on NZD USD. Let's see. And I haven't calculated all of the ATRs on that. Well, we can do a couple together. And then that'll be one of y'all assignments. Because what we're trying to do is get the whole chart completed so that each week when we get together on Saturdays, we're not trying to calculate but the current week. And then we're just looking at what the current week has done, what the ATR is telling us it typically should be doing. And then we can be taking a look at here, let's mark this up. No, that's Fibs. Where is it? Oh, there it is. Head and shoulders. So it'd be something like that. Is that what y'all see? That's what I see.
Yeah.
Oops, let it go, let it go. Now, remember, this is on a week. So if that's the case, on the week, I'd be waiting for these things to set up to cross, right? But if that's the case, then I'm wondering, what is the scanner calling for on that? NZD USD. NZD USD. NZD USD. It's got it on the day, 4 hour, 1 hour. That's why let's see. And this all in this light. You know, off. I need the light on or off. I need it on, please. Oh, check that out. Oh, that's beautiful. Oh, it's right at the entry on the day. Oh, we might have got real lucky with this one, y'all. And this y'all pair. Look, and it's right at the 50. Look, the 50 is going to push that up. Oh, this is beautiful. See, this is the reason why you want to look at it when the market is closed. So then you can start planning for it ahead of time. Okay, so that's on the day. Let's see. What was it on the 4 hour? I don't like that. That means that already happened. And is it the USD? It's on the hour. Come on, give it to me. Oh, there it is. Okay, so that's already dropping. Oh, look. It already crossed on the 30-minute going down. It's under the street with the RSI ain't confirmed it. Because you know the smaller time frames are going to set up before the higher time frames. That's why you look to the smaller time frames for your entry. Because look, on the 15-minute, the cross happened back here. But it was in the street, so it was still consolidating. It wasn't ready yet. But look, it crossed here. But look, it's consolidating because of that 50. It's got to break that 50. And that's on the 15-minute. So you're going to see it break this 50 on the 15-minute first if it's going to continue to the downside. It's going to break it, retest it, and then continue to push down. All right. Which is basically breaking your take profit too, because we all know our take profits, the entry, the stop loss, these are all levels of support and resistance. This is the scanner's way of teaching you support and resistance. That's why you'll notice that at those levels is where the market will consolidate, because it's trying to push through that. Did y'all know that? That's what we anticipating to happen. You ain't know that, huh? Yep. All right, so check it out. So that's what's going to happen. Well, that's what we thinking is going to happen, because we said what? On the week, it's looking like it's going to push to the downside and then up.
Mm-hmm.
All right, so let's put in our neckline. Now we know that that's the bottom of the candle, which is closer to that 50. Closer to that 50. So it's a good chance it's going to come right down here, run right along it. All right. If it does, you should buy off of it, right? Now, but it's a good possibility because of this wick down here. That this zone right here, right, is your supply and demand, right? We know that it might actually break through this first level at the 62846 and go down to the 61917 and then go up. So it might come down, you know, all the way to complete the shoulder. It might even just wick down here. So depending on what type of trader you are, you can have actually a order sitting there at both levels going to the upside. Now I'll be cautious. This is on a weekly chart now. So that's how many pips? That's 92 pips. You ain't got no stop loss big enough to hold that. Right? So you'd have to watch that. But at least it's marked up so that we know. Right? Because it's probably going to hold right here. But it's probably going to wick here and then go up. But then it could come all the way down here and hold. But I don't think so. I think that's what it's going to do. I think it's going to wick there and then go up. All right. So with that being said, last week, August 10th, it was to the downside. All right. We might as well calculate it since we on here. I need somebody to record the number. And then we can calculate it together. Here, let me even open up my calculator. Make sure we got it open. Yep. Okay, cool. Let's see. Somebody got the y'all gonna get the numbers for me?
Yes.
All right. It's 0.66269 is the high. 0.65248 is the low for last week, or this week, I should say, August 10th. Let's go to our calculator.
I didn't catch that.
Did you catch it?
I didn't. I'm sorry.
That's all right. Come on, we go back to it.
You said the high first, right?
Yeah. Yep. I'm going to say the high, then the low. Okay.
Right.
So the high is 0.66269.
Okay, I got that.
The low is 0.65248.
Okay.
Got it?
Mm-hmm.
All right. Let's calculate it. All right. What was the high?
0.66269.
Mm-hmm.
And the low was 0.65248.
102 pips. NZD USD, right?
Yes.
That's what number? 28. And that was this week. And what did I say that was? Do y'all remember what I said?
It's like 106.
102. 102. 102. 102. And it's red, right? Yeah, it was red.
Yes.
All right. Okay. So the only way this is going to be accurate, right, is if we go back, and it's going to be one of the things that I want y'all to work on, is go back and calculate out what they are. I'm going to post this version of it in the study groups. And all you got to do is go back and find the high and the low for each week starting March the 30th for y'all 5 pairs. And then come in here and put the number of pips in, right? And what color the candle is. So if that week's candle is red, make it red. If that week's candle is blue, make the number blue, right? Don't worry about the other weeks. I'll go back and fix those. If we can fix week 52, then we'll be current. All right, and I'll keep working on them too. But if y'all help me, we'll get them done a whole lot faster. And then that way you'll have a running system to work with, which will give you the number of pips each week that each pair gave out. And it'll give you the average number of pips that it typically should give out based on how many pips is given out already, which is going to help you analyze for the week how many pips. Okay, so for example, I think the last full one I got is this one. Yes, 12 weeks. NZD, USD, up until that point, was giving out about 249 pips. So we need to know where we are right now. And since it's giving out 102 pips, it's at the beginning of a trend, right? Because we saw that. Then it's safe to say that this next week is possibly going to sell. That would be my analysis on a weekly basis, is that this week NZD USD is going to sell. And based on what we know right now, it was given out about 200 and some pips, but we need to be accurate, so we need that number calculated. I'm going to work on it this evening and try and get it done before the market opens up. If y'all can get these numbers done before the market opens up, it's going to give you a better analysis as to how many pips you can expect this pair to give you out for next week. So if you know, for example, that NZD USD is going to give you an average of, let's just say we find out it tells us it gives us 249 pips, then we can safely say that NZD USD is probably going to give us that many pips to the downside. At least that's what we can be looking for or expecting. And if we're looking for 30 pips, right, which is really what, 5 days a week, 30 pips, it's 150 pips. We can get 150 pips in a week off of this one pair. All right, so that's that. Now, we know the scanner says it's going to go down. How many pips is it from here? If we catch it from the scanner. That's only about 11. 1, 2, 3, 4, 6, 7, about 11. Yeah, about 11 pips. That ain't enough. That's on the 15-minute. NZD. NZD USD, my bad. NZD USD. That's on the 30-minute. That's still only down to there. I wonder if the hour gonna give you farther than that. NZD USD. Was it the same? 65,281. Still the same. But look, it just crossed on the hour. Just crossed on the hour on the scanner. Now look, check it out. This is perfect. Look how the scanner said that the entry was up here, 6560036. But look, the 50 never let the market go up to that point because it continued to push it down. The sauce is just now saying that your real entry is closer to take profit 1 because that's where the initial cross happened. And it's out the street. But look, it hasn't really confirmed the overall trend going to the downside, but you can see that the gap is closing. So for your advanced traders, those individuals would be looking to get in, right? Or would have already gotten in on a lower time frame because they would have caught the cross earlier, as y'all saw already. Those individuals that are newer beginners are waiting for this thing to actually set all the way up. And then they're going to get in and continue to ride the wave down. What does the 4 hour look like? NZD USD. No, they don't have it on the 4 hour. And they don't have it on the day that way. Let's see. Do they have it on any of them? And this is really all it is, guys. Using the scanner, going through, checking, looking for your pairs, looking for your setups. Because you want multiple confirmations, right? You don't have to be the expert. You really don't. All you got to do is come in here and look and confirm that this algorithm is telling you exactly what you are already looking for. We looking for sales. We looking for sales on NZD USD because we trading with the trend. The weekly chart is telling us that it's going to possibly sell all week overall. Now, I'm not saying that there's not going to be some buy opportunities throughout the week. There will be, because there are going to be some pullbacks. But as a beginner, you don't want to play that game. Sometimes as an advanced trader, you don't want to play that game. The safer side is trade with the trend. So if you know that it's moving to the downside, to the downside on a weekly chart, then you're looking for your entry on the smaller time frame. And for the swing traders, once you find your entry, if you know that it's moving on a weekly chart in that one direction, you could possibly run that wave for a few weeks. Because as you saw, this thing is going to sell for a while. Let's see. It sold from here, which was the shoulder, to here, right? That's 402 pips, right? It wicked all the way down at the height of it at 488 pips, but look, it took 70 days. So let's just say it crosses right in here. Or let's just say that it wicks back up here, because it might do that too. You could possibly even put you a sell limit right there. And it might just wick back up there just to collect the order and then push down. I wonder what my VR says. Let's see. 1, 3. There's more sellers. Yep, there's more sellers. Let's see. Look like more sellers. Is it? Go. 1.496 million. Yeah. Look at that. It's 1.496 million sellers to 1.28 million buyers. It's going to sell. And then look, the next block is 939,000 sellers to 554,000 buyers. It's going to sell. 451. It's going to sell all the way, like I said. And then it's going to consolidate right here. 271 to 2. What is that? 271 to what? 271 to 246. Yep, that's about right. That's going to consolidate. And then look. Now the buyers are winning again. Right here. At 111,000 to 98. So it's just like we said, it's going to sell all the way down here. It's going to consolidate at 62748. Right in that area. And look, you can even put yourself an alert to let you know when it gets down there. When it gets down there, you're going to be looking for it to buy back up. Well, it's going to consolidate right there. All right. You can even put an alert down here. If it get down here, you know it's gonna buy. Right? Because that's gonna be that shoulder. Because it's already done all of this. It's collected all these orders already. Yep. All right.
And what was that tool?
It's the VR, the visual range. It's the last tool that I teach you in my 12 weeks.
Okay.
It shows you all of the buy and sell orders that the brokers and market makers have access to. It's basically a tool that they use to watch and monitor volume.
So that's how they know where the liquid is and
Yes.
when to go and violate
Yep.
something and snatch up the stop losses.
Yes, that's why you'll notice that this long wick, how they exhausted this, was because they had to collect those orders. You see them? And look, there were more sell orders than buy orders. And then when it got to the bottom, look at that. This is an order placed by the market makers. 15.931 million sellers to 15.947 million buyers. The buyers win and push the market back up. You see that? Right. So the way that I teach trading is my trading system is currency, volume, and the sauce. That's what I teach.
I kind of caught it because I just started, and I remember when you mentioned something about you're gonna take us from being a retail trader, and that was the first time I heard somebody. The whole time I've been doing this, and I've been doing it like about there's somebody like, okay, so we've been kind of conditioned to look at certain things, but what you're talking about now is more institutional trade with them.
Yes. So for example, if I know how they're trading and I'm trading like them, I can get an entry like them, right? I can anticipate when they're going to shift or move the market. I can think like they think. So I won't make the same mistakes that you'll make because it'll look like in this instance, the market is selling, right? Which it was. And what did they do? They automatically shifted it and pushed it back in the opposite direction, collecting all of that money in the process. And all I had to do was use my tools to help me see what they see.
Yeah. So even so what they're looking at, if retailers, are we looking at this inverted, we're thinking that we might put in a sell and they know that we got in buys to buy up. They might go down and snatch us even lower just to snatch up our stop losses, just to come back to continue going in the same direction.
Correct. That's what's a stop hunt.
Okay.
It's also what the news does. The news is only there to push the market in the direction that they want it to go. So if it's already going the way that they want it to go, right? Or maybe it's going the opposite way that they want it to go, and then they want to change directions abruptly, the news.
Yeah. And they want us to participate in that.
Exactly. Right. And if you notice, check this out. This looks like a W to me. We know what comes after the W. The M, which is going to pull down, pull up, right? Pull down. That's what we're looking for. You just study the patterns. The more you keep looking at it, the more you keep looking at it, the more it's just going to come to you. Like I can look at it naked, or I'm not seeing any of it.
Right.
Right? And just draw up the patterns. But that comes from studying this. Because isn't that exactly what I just drew?
Yeah.
On the exact I'm on the exact same chart, but this is on a weekly chart.
Mm.
And the patterns happen over and over, no matter what time frame you on. It's just happening bigger or smaller. Like, look at the little W right there. You see it? Ooh, ooh. You just start looking for them. You just start seeing the patterns. Look, here go M. Boom, boom. You know, Orrin calls them Batmans. I heard one educator call them Gumbies before. This is kind of what you see. Some people call them peaks and valleys. You just kind of look for them. Just give you a better picture of what you're looking for, what you're looking at. Right, but I put all these things together.
Yeah.
Like this right here tells you your Mondays, which ain't nothing but the level system.
Mm.
I study Orrin.
Yeah.
Oh, let's check out levels. Let's just see. For kicks and giggles. Because he got it on there. He's got it on there. That's even sweet. Let's see. He might have a head and shoulders on there. Oh, if he called it, then we know we're in the right direction. Because we said it was an inverted upside down on the week.
Mm.
Let's see. I told y'all, Saturdays is just pulling it all together. You know what I'm saying? Seeing it from the bigger picture, seeing how all of the pieces come together. When you're in the 52 weeks, you're getting each week, and it's
Yeah.
like piece by piece because we're trying to
Yeah.
show you each building block separate.
Yeah, you already changed
Oh,
my
look, and it
mindset.
opened up on NZD USD. Look at that. Check that out.
Is that confirmation?
And that's the shoulder. That's last week's shoulder. Look at that. Left shoulder, just like I said. Oh, check that out, y'all. That's perfect. Let's draw it up on his system. Ding, ding, ding. Right. Right. Let's see. Right there. And right about there. And that's on the hour. All right. So this is all still the head.
Mm-hmm.
Because it hasn't actually come back up yet. This is over here. We can always make it work better, but yeah, that's all. That's all head. It ain't gonna always be pretty, guys. It ain't gonna be like perfect, but for the most part, let's see. I can't get this. And that's that. Get this by the way. Oops. And this y'all pair, so right? We basically marked up y'all pair for the week. So basically we're waiting for this to what? Retest up here and get, well, actually it kind of did now. It didn't. This is all still the shoulder. This is probably all still the shoulder. Orrin would say that's all still shoulder. Or did it break out here first? I guess. Because look. Because this part, this is the shoulder. See, that's the thing about the head and shoulders pattern. Like, there's so many of them because it keeps happening over and over and over again. No, this didn't go upside down that time. Let's delete that. It went ups. It went right up. Yeah, it did. So basically went up here. Oops. Yeah, this up here. Which is this here. Oh, it's the head and shoulder. So basically it went up here, came down here, created this head. It just gave us 100% on this shoulder, on this head. Okay, so which created this head and shoulder. So we're waiting for, this is the right shoulder. So what is it gonna do? Overall, it's gotta come back up here. So what is it gonna actually do? It's probably, because it came down here, gave us this head, it hasn't come up here. So it's basically, it should come back up to here, then come back down to here to go up. Y'all see that? I think that's all right. Let's see. So it would have to do what? It would have to, here, let's do this. It would have to come back up to what? That would have to give us this head and shoulder. Then we'd have to take this head and shoulder, which will give us this, right? Which then would give us this, right? Which then should give us this. Which would be, is that right? Is that what y'all see? So it's a head and shoulder on top of a head and shoulder. Do you see it? So there's this head and shoulder, which is the previous week, August the 3rd, which is that Monday, right? So then it actually broke out for the top, because we know what the rules are. Where's the rules? Do we got the rules up here? Rules, boom. Which side of Mondays did market break from? And if you remember, this is one of Mark's strategies, right? I forgot which one it's called, but same strategy. It's Monday, it creates the left shoulder, right? It broke out, which created the head. It gave you 100%, right, of the neckline, which is down here on 0.65793, right? That's 100%. Did the market complete the right shoulder? No. It hasn't come back up from there, back up here to 66425. That's on the bigger one, right? So we're waiting for this to come up here and then sail down. All right, so this is here, this is. So this is sail limit up here, right? This is also the sail limit is right there. All right, this right here. It's right here. This is the buy. Buy there. Sell limit here, buy here. So this is here. This is the sell limit. This is what we're looking for. That's this. What's this? Which is really here. Well, thank you. Boom, boom. Yes. It's probably gonna buy limit again right here. Probably creating this. Maybe. It might be this. Then we'd have to look back to see, is there another shoulder? Maybe. This one might be far-fetched. But that's probably the safest bet based on the rules. So here's the left shoulder, head, 100%. We're waiting for it to get back up here, creating the right shoulder on that regular head and shoulder so that we can sail down. But there's a inverted in here, which is this, which is last week Monday, which is the 10th. So it created this shoulder. It broke out from the bottom, creating a head. And it hasn't come back at 100% yet. So it's probably going to buy up to this point, sell like this. So they kind of overlap. And these smaller ones are probably happening on the smaller time frames. But it's just a hypothetical. Guys, remember, this is like a science fair project. You're just coming up with an analysis and you marking up every potential setup that you see. And then you just wait for it to happen.
Jackie, you start from, you just work from a week down when you do your top down analysis?
I start from the week because I'm calculating the ATR because I want to know how many pips the pair is going to give out.
Okay.
Because if I know how many pips it's going to give out, then I can safely assess how many pips I want to try and go for in that pair. You know what I'm saying? Okay. Like if I know that, and it also tells me how fast or how slow the pair is moving too. So like, for example, if you've been kind of testing around on the pairs, you'll notice that like a pair like EUR USD or USD JPY, they're slower moving because they give out less amount of pips. Mm-hmm. You know what I'm saying? So like, even when you start looking back at some of the beginning of the year, like for example, NZD USD was only giving out right around 100 pips every week.
Wow. For the total week?
For the whole week.
Mm.
So just think about that. If you were looking at NZD USD and you looking at it and you thinking like, ooh, this sucker finna buy and it's gonna buy for a while, and you thinking like, ooh, I'm gonna catch me, it should at least give you 200-300 pips because that's what it's looking like. It might give you 200-300 pips, but it's gonna take you 2-3 weeks.
Mm.
That's good to know, isn't it?
Yeah.
Your analysis might be correct, but are you patient and disciplined enough to wait long enough for it to give you the move? Now, if you're looking at a pair that's more like, say, GBPR, where it was giving you out 437 pips in a week, you know what I'm saying? You can kind of gauge how many pips, and it's telling you in which direction. So I know that if it's giving out 437 pips in a week, and I know that it's supposed to sell all week next week, then I'm looking for it to give me roughly 437 pips that week. It might give me a little less, it might give me a little more. But for the most part, I know where it's at. Like, see, in 8 weeks, GBPR was giving out, averaging about 412. Let's see, 12 weeks. It was giving out 590. It jumped to 590 because look at some of these weeks. And that's because the market shifted with everything that was going on, you know, in the economy and health and everything else.
So if you see something like, let's say it's only giving out 80 pips for the week. That's what's forecast. In that
Yeah.
case, would you just like maybe like cut
I wouldn't trade that
your-
pair.
You wouldn't trade it. You just that's the purpose of having multiple pairs.
I wouldn't trade it.
Okay.
I wouldn't trade it. And it'll help me see where the reversals come. Because you'll start to see the market slow down. And you'll start to see a shift. Or you'll see the pullbacks.
You mean just looking at the
Just looking at the numbers.
week to week. Okay.
Yeah. Yeah. Just looking at the patterns. Like, look, for example. Okay, here, let me see. If I go back to my 32 weeks. Some of the ones that's done all the way through. I've done, I think, all of the odds except for USD. Or even like EUR NZD, because that's one of the ones in the Midwest team. Right? So, EUR NZD, look, at the beginning of the year, it bought for 2 weeks, then it sold. It bought for 2 weeks, it sold. It bought 5 weeks. Then it started selling. Selling. Then it bought. Then it sold. Then it's been buying, right? Averaging 406 pips. Let's see how many pips is given out, and then we'll have it accurate for that particular pair. EUR, NZD, just so y'all have it, and then I'll know too where that pair is at. In the past, before all of these crazy things have been happening, GBP NZD was the one that was giving us out the most pips. It was moving the fastest and it gave us the most pips. But now with everything that's going on and the changing in the dynamics of what's happening, that's not necessarily the case. All right, so this is EUR NZD. All right, I need somebody to write these numbers down. The high is 1.81071 and the low is 1.76665. And it's blue and it's got a flat bottom. All right, let's calculate it. All right, what was the high?
1.81701. And the low was 1.76665.
1.76665.
Yeah.
3 sixes like that.
Yep. And it's
503. So it gave out 504 pips this week. Let's see, 504 pips. 504. And it was blue, right?
Yeah.
It's blue. Yep. So it's still averaging 406 pips. So it's safe to say that it will typically give out 406 pips based on the data that we have. And for the last 4 weeks, it's been buying, which looks like either this is a strong pullback or it has changed directions. So let's just go back and look, EUR NZD. Let's see.
So this is already, it's already, I guess you already got the formulas in there to calculate every time there's a change in the pippage to get a new average for the week.
Yes.
Okay.
I've already set up the spreadsheet to do it for you. All you need to do is just put in the weekly numbers. And like I said, you don't even have to go back and do the ones in these other weeks. I'll go back and fix them if I can just get 32 done. Because once I fill in 32, I can copy and paste and just drop them into the other weeks.
So once this is complete, let's say we complete the 52. So when the year starts, we'll just update that first week, and it's still just taking the average from the previous 51 week. Okay, gotcha.
So what I do is I just record them every week, and it's just part of your trading practice. Like it's just gonna become something that you do every week. Like you're never gonna stop doing it. Like it's gonna just continuously become a practice, so that you can monitor the market to see how many pips the pair is giving out, how many pips the other pairs are giving out. You can start to forecast if there's a change in one specific currency, how that's going to affect all of the other currencies that's associated with it based on the rules that we have. It's a lot of things that go with it, but it helps to give you a basis of where to start and kind of how to look at this thing from a professional standpoint.
Yeah. So all of the let's say the USD pairs that we have in the South, are they is that a currency correlation, or is that just on limit to maybe within 1 or 2 pairs within that group?
No, it's a correlation. It's a correlation because if you study your currency strength, right, we know that depending on where the United States dollar falls, if it's your base or if it's your quote, is going to determine which direction the market is going to go in based on its strength. So if it's in the base position, like these 3 down here, right, if the base is strong, right, then I already know if the United States dollar is stronger than these 3, it's going to buy. I don't have to look at nothing else. I just know that's what's going to happen. If the United States dollar is in the quote side, like with NZD USD or GBP USD, right, or EUR USD, if the United States dollar, right, is strong, then I know in those currencies, that market is going to sell. I know that just because I know the rules of currency. I don't have to look at no chart. I don't have to look at no pips. I don't have to look at nothing. I know based on currency strength. So based on that, if I know that the United States dollar is strong, then I know that every pair that has the United States dollar as the base will buy. And every pair that has the United States dollar as the quote will sell. And I can trade all of those pairs at the exact same time, which is called basket trading, which is what I'm teaching you by giving you the pairs that I've assigned you. Because as you notice, 2 of them, the United States dollar is the quote, and I believe 3 of them is the quote, and 2 of them is the base, based on the way that y'all are assigned. Right? So like Zenja, I don't know if all of you know who Zenja is, but Zenja loves United States dollar JPY. UJ is her thing. So she studies that thing, and she knows the correlations between UJ and the other currencies, right? And that's one of the other things that I talk about. We also know the correlation between the United States dollar and gold, right? The reason why we watch the United States dollar, right? But we also know the history of the dollar and how the dollar basically is the primary currency that is basically supporting this whole thing, right? So it's just studying those kinds of things.
Yeah.
But that's above and beyond the academy, guys.
Yeah. So it's gonna be times they're gonna have to. They got to manipulate the dollar to keep the market running properly.
That's right. And if you notice what's going on right now, the dollar is falling. Since the dollar is falling, gold is skyrocketing. Gold is at an all-time high. Eventually, gold is going to exhaust itself. It's going to hit a ceiling, just like that dollar is going to hit a floor. And when they do, they're going to reverse. And they're going to go in opposite directions because they always move in opposite directions. That's a currency correlation. Yeah, and that's just one of the things that we study by doing these kinds of things. All right, guys, we at about an hour and a half. So I hope I gave y'all some value, a whole lot of stuff to think about. I will post the updated version of the ATR into the study groups so that we have access to them. If you guys do participate in helping me fill it out, let me know. Just post a note into the study group. Say, hey, Sugar, I got the pairs done for the ATR. And then that way you can send me those numbers. I can plug them in so that by next week's class, we should have a completed version, and then we just working towards moving forward 1 week at a time.
Okay, so
then we're moving on to the 36-week tab.
So I could download this out of the links
Yep.
that you sent, correct? Okay.
Yes, you
All right.
can. Yep. And save it right to you. Now, I will show you one other thing that I started creating at the front of it. And I'm going to go back and still be working on this. You ain't got to work on it, but it's just something I'm adding to it. I started building a spreadsheet so that we can keep track of what the actual highs and lows are. Because I've been manually writing them down in a journal.
Mhm.
But I figured if we created a piece in the spreadsheet that would just monitor it for us, it's easier for us to just plug them in. And then as you see, I've already entered in the formula to calculate what the pip count already is. And then all we have to do is just go in and put it into whatever week it is, so that we know however many pips that pair gave out. But it's just another way to have further confirmation and a way to go ahead and see our documentation based on where our highs and lows and pips are, and making sure that everything is accurate.
So these numbers, are they from Sunday from open to close Friday? That's how we get the highs and lows for the week?
No. So with your highs and lows, I'll show you. And I go over it in one of my videos. I forget which class it is, but for the most part, you see these running numbers up here at the top of the screen?
Mm-hmm.
The O is for open, the H is for high, the L is for low, the C is for close.
Okay.
Every time you put your cursor on any one of your candlesticks, it's going to give you those calculations. So if you notice, for the candle that I'm on, it tells you what the open was, where the market opened. It tells you where the market closed.
Mm-hmm.
And then it also tells you the high and the low. All we're doing is taking that high, that 1.99321, and we're subtracting the low, 1.78485.
Okay. Got it.
That's it. So if you go into the spreadsheet, on this sheet, I'm putting them in. This would be the high, this would be the low, and then it calculates it for me. And then all I'm doing is going and taking the pip number and placing it into the appropriate week.
Yeah.
Right?
Yeah. Before you guys, want you to know, before I started this 52-week, it's like I was trading and I was like, man, this seemed like real aggressive the way I was trading. You know it, and it's like I wish this class was like really put out in the beginning, because initially we jumped on that you know, that other aggressive that one, and I was like, whoa, you know, for a beginner, this is way, because I fell in love with that the bankers, you know, the $100 government, the 10%. I fell in love with that because it wasn't so aggressive. And it gives you time and you can make mistakes and still recover, versus no lot sizes in the beginning, because I made it, I went all the way up to week 6 and I didn't blow my account, but I had, you know what they say, don't trade bill money. So I had some bills that like I was forecasting to pay off by December. So I said, well, now that I think I know how to trade, I could do this again. So I withdrew and, you know, paid it off all for, was it 4,800, whatever it was. And when I started back, it was like, I still was trying to trade like I was trading before. And it was like, this ain't working. So this is why I came here. And since I started with your plan, I've been having more successful trades, you know.
To be honest, once you get to Mark and you get to the 357 system, you need to be confident. You need to have discipline. You need to have patience. You need to be consistent. Because just like everybody wants to go from $150 to 1.2 million in 13 weeks, and that sounds all great and all, if you haven't developed those skill sets yet, it's gonna be a hard road. It's gonna be challenging. So, not to say that you can't do it, but that's the reason why we want you to try and get yourself in a position where you develop those skills, right? Now, I know that some of our students are coming in midstream. We're getting ready to start a whole new educator this week, right? And he's got a whole new trading system and a whole new trading strategy that he uses, right? But as you continue to go along, you'll start to see how each one of them are built on top of the other. Right? I just start us off because a lot of the things that I'm talking about, you need to know to build the foundation, because you, like, nobody's talking about this. They don't tell you about the rules. They're not telling you, you know what I'm saying, that even though swipe coin, swipe trades is calling out a signal and they telling you it's 150 pips this week, but they ain't told you that the pair that they calling it on only is giving out 100 pips. You know what I'm saying? And for a beginner, you're taking their analysis for face value. You're not really doing a thorough analysis for yourself because you don't know how. And then you end up losing because you really should have only went for the 30 pips and you was going for 150, and it was only gonna give you 100. It's just our way to try and help you cut the corners. Now, like you did say, it is very important to realize that these strategies start to become complex and more advanced as you go along. And it's not really even the strategy. It's just by the time you get to certain levels, you need to have developed those skill sets so that you can do it. Because if you haven't realized it yet, trading truly is 10% skill set. We can teach anybody to trade. Children, like any age group, nationality, learning disability, it don't matter. The challenge is you got to overcome some of these things for yourself. You know, and that's only going to take practice.
I was just lucky my first couple of weeks because, well, I wasn't really trading a lot of the regular pairs. I was all over the place, and I was just like looking for opportunities, you know. Simple. I was fortunate enough I didn't get violated a lot, like on the head and shoulder setups, and I was blessed. But I started going to, like, a lot of the reason I accelerated through that compound plan so rapidly. I got into US 30 and I learned how to, you know, scalp. So that's where the bulk of it. But at the same time, I really didn't have the full understanding of how I was scalping, and, you know, just hit and miss, you know.
Right.
But,
so really, only thing you were doing is you were taking signals, Sugar. you gotta learn to become the signal, Sugar. I'm sorry to tell you, like, people put you in. Listen, people promote US 30 and gold and all these indices and cryptos. If you haven't mastered one forex pair, don't even waste your time. Like, yes, you can make a lot of money. Yes, if somebody's gonna give you a signal, they might be spot on, but you taking a risk, a big one. You know what I'm saying? And then not only that, like you not doing yourself any justice or due diligence if you're not gonna learn the basics so that you understand how they're doing what they're doing, because you're not meant to continue to take a signal. You're supposed to be learning how to become the signal so you can do this for yourself. This is a skill set that they should never be able to take from you. Like, no matter what happens to you in life, this should be something that you could literally step back and fall back on and be able to dust yourself off and pick yourself up and continue to move forward. Like, nothing should be able to shake you if you can conquer this. Nothing.
Yes.
So that's my opinion. The goal is, if you can make $100,000 on one Forex pair, and I've taught you that you have 28 options to choose from before you even step off into exotics or gold or silver or platinum or any of those things. You want to try and conquer one of these Forex pairs first. Yeah. And if you can do it in demo, you can do it in live. Yeah. That's all it takes. A little bit of practice, guys. That's it. But my suggestion would be, if you can get through my videos, get through them. Because like I said, it's going to give you just a lot of foundational stuff. You know what I'm saying? It's going to give you the stuff, the rules that you need to know, the things that's going to give you just a little bit more confidence when you're starting to look at some of these setups. And then, you know, the sauce is just there really to give you a better picture when you're looking at the scanner, so that you can develop yourself as a trader. Because really it's for beginners. I mean, I use it. I continue to use it. But it's meant for beginners, because I needed it as a beginner, guys. Like, truth be told, I needed something to help me see what I needed to see to be successful.
They say use your tools.
Right, use your tool. Use what you're paying for. Mm-hmm. That's what you got to do. Use what you're paying for.
It's in the bathroom. It's dripping downstairs.
A towel.
I thought it was a waterfall.
Get a towel.
Downstairs.
Get a towel. Get a towel, baby. Get a towel. Okay, so, yep. All right, guys. Well, if y'all ain't got nothing else for me, that's what I'm going to be looking at. I'm going to be looking at one of y'all pairs, NZD USD. And we see it's on levels, it's on the scanner, and we saw it on TradingView. So we're going to look and see what it's going to do, and see what it's set up for. Mm-hmm. All right. And then be ready, y'all, because Wednesday we start a new educator. I'm so excited. I can't wait. I always like when the new educators come on, because I'm always a student. I'm learning with y'all. So don't feel bad. Don't feel like, oh, I don't know what's going on. Believe me, sugar, you're going to figure it out. And no question is a dumb question if you don't know the answer. So feel free to ask them. If you don't want to ask them in the study groups, then shoot them to me so that I can get you the answers you need and set you on the right track. All right. And if you know anybody else that needs help, I encourage you to encourage them to find their way to this 52 weeks, y'all. They gonna be pleasantly surprised as to the information they receive.
That's the best $10 ever spent.
I'm trying to tell you. We're gonna hold you accountable, sugar, and make sure you get to the end so that we can celebrate your 52 weeks. Because, guys, just think about it. I've only been in this thing for 2 years, a little over 2 years. I not only learned how to trade, I created my own strategy, and I helped Chad and Mickey create the 52 weeks course. So I know you can do this. You can do this, and I'm so excited to see what's in store and what y'all gonna bring to the table. I love you all, and I hope to see you all tomorrow on Chad's call. Good night, everybody.
Good night.